China is mounting a pretty strong defense of its manufacturing-led economic model as pressure from the United States and Europe continues to build. With high-level trade talks expected later this year, the EU is demanding progress on long-running trade disputes. By October, Beijing has made it clear that it has no plans for any major policy shift. Now, here's a report on why China is standing firm and what this could mean for global trade. Take a look.
China is stepping up its defense of an economic strategy that prioritizes manufacturing and advanced industries over consumer spending. This comes as trade tensions with the United States and Europe intensify. Ahead of expected meetings between President Xi Jinping and US President Donald Trump, and with the European Union setting an October deadline to resolve trade disputes, Beijing has signaled there will be no major shift in policy. Chinese officials have rejected Western accusations of industrial overcapacity, arguing that the country's investment-led development model remains appropriate for an economy that is still catching up with advanced nations. State media has also defended China's relatively weak consumption as a historical outcome of its rapid industrialization. The United States and Europe argue that China's heavy support for manufacturers combined with weak domestic demand has resulted in excess production that is being exported at low prices, hurting industries in other countries. Beijing, however, says its industrial policies have produced affordable and increasingly sophisticated products that benefit the global economy. Premier Li Qiang has dismissed concerns over a China Shock 2.0, describing China's technological rise as a global opportunity instead. Analysts say China's messaging has become more assertive. This reflects greater confidence after Beijing managed to withstand previous rounds of US tariffs by leveraging its dominance in strategic sectors such as rare earth minerals. Despite defending its model, Beijing has acknowledged imbalances within the economy. Officials have pledged to curb deflationary price wars among manufacturers and have promised targeted measures to support consumption, but without pursuing major structural reforms. Meanwhile, international research continues to question China's approach. The OECD estimates that nearly 60% of Chinese firms' market share gains are linked to government subsidies. A Bank of Italy study says about 75% of China's recent export growth has been driven by weak domestic demand and excess production, while McKinsey estimates China is adding productive assets at 3 times the pace of the US and Europe combined. As negotiations draw closer, China appears determined to defend its economic model while limiting any major policy concessions. Business Bureau, WION, World is One.
For all the latest news, download the WION app and subscribe to our YouTube channel.